Assalamu alaikum.
Billions of dollars could be about to flow into the crypto market from the Middle East and beyond. That's because the crypto industry is starting to roll out products and services that are compatible with Islam. This could open the door to up to 2 billion Muslims around the world who have been waiting patiently on the sidelines, and it could become the catalyst that takes the crypto market to new highs, inshallah. Let's dig in. Okay, let's begin with a bit of context. Depending on your religious background, you may or may not be familiar with Sharia law. If you are, please feel free to use the timestamps below to skip ahead to the next section. If not, well, Sharia law is a part of the religion of Islam. Sharia can be understood as a way of life based on God's will for humankind. Sharia is considered the ideal form of guidance that Muslims follow to live a fulfilled and religious life while being closer to God. In fact, the word Sharia literally translates to the clear path. Now, notably, Sharia isn't the same as Islamic law. Essentially, Sharia is the interpretation of God's values, and Islamic law is based on Sharia. Because Sharia interpretations can vary depending on who's doing the interpretation, this can affect how different Islamic laws are created as a result. Muslims understand that the rules defined by Sharia reflect a broader sense of purpose and values, as well as a need to protect human welfare. Generally speaking, there are 6 core universal principles of human welfare that Sharia is designed to protect. These are life, reason, religion, honour, family, and wealth. So, let's use reason as an example. In Islamic culture, alcohol is considered haram, meaning prohibited, because alcohol has a negative impact on a person's intellectual ability to think and make reasonable decisions. Meanwhile, adultery is prohibited because that would impact another core principle, family. Now, at this point, you might be thinking, well, this is all very interesting, Guy, but what does any of this have to do with crypto? Well, it's because of that last principle I mentioned just a moment ago, wealth. But to understand why Sharia compliance makes crypto a bit of a hot potato, we first need to understand the world of Islamic finance. And by the way, if you're enjoying the video so far, smash that like button to let us know and subscribe to the channel and ping that notification bell so you don't miss the next one. Islamic finance, also known as Islamic banking, refers to financial activities that adhere to Sharia compliance. The reason why Islamic finance is its own separate industry is because conventional banking is made up of elements that are considered unethical and are therefore deemed as haram, prohibited. The most widely recognized rule in Islamic finance is the ban on usury, which is a fancy word for lending money and charging the borrower interest. In other words, it's deemed haram to make money out of money. This is because in Islamic finance, money is seen as a blessing from God, so it has no intrinsic value and therefore shouldn't be abused or stockpiled. This is known as riba. As such, all transactions have to be backed by a tangible asset, such as gold. And not only that, but any transactions in Islamic finance have to have a purpose that benefits society in some way. This reason is considered before the borrowing is authorized, meaning everything between the borrower and the lender is fully transparent. Rather than lending the money directly to the borrower, the bank instead uses this money to purchase the underlying asset or product. This can then be sold to the borrower at a price higher than the market value, allowing the bank to turn a profit. This transaction would be deemed as halal, which means it's allowed. So, to give a simplified example, say you wanted to borrow the money for a $500 washing machine. In conventional finance, you'd simply apply for the $500 from the bank, who would give you that cash on the condition that you pay, say, $600 back. The reason this is haram is because no matter how much of a financial burden this puts on the borrower, the bank would still have no reason to care because they're still getting $600 back. In Islamic finance, the bank would instead purchase the washing machine, which the bank would then own, and then either allow the borrower to buy it from them in fixed-rate installments or sell it to the customer at a higher price. This transaction would be deemed halal. But why is this? Well, There are a few reasons. First, this money came from a product that generated a profit rather than that profit being generated by interest-bearing loans. The reason why a bank can make a profit is because of the risks it took along the way, as in the risk of buying and storing the underlying product, and then the risk of selling to a customer who's potentially unable to afford it. Essentially, the profit is seen as compensation for taking on this risk, although it should be noted that this risk was shared between the borrower and the lender, which is another important part of the way Islamic finance is structured. Anyway, the second reason why this transaction is halal is because the borrowing is for a reason that has a positive impact, in this case, allowing for clean clothing. This is a core concept throughout Islamic finance because every transaction has to play a part in bettering society, much like with ethical investing. Now, believe it or not, but this ethical approach has helped Islamic finance to be successful. It's also helped it become much more resilient when compared to conventional finance, particularly during times of crisis, such as the great financial crash of 2008 and the recent global pandemic. In the case of the pandemic, the compound annual growth rate of Islamic finance grew by 10%, which is a faster growth than conventional finance, which grew around 6% during the same period. When you consider everything we've discussed so far, this makes sense. The risk sharing means that both parties are less prone to any sudden economic shocks. The focus on transactions with a moral foundation also naturally creates more stability. And because all transactions are backed by tangible assets, this makes it difficult to run up excessive levels of debt. Today, the Islamic finance industry is worth around $4 trillion, which isn't bad at all for an industry that barely existed just 30 years ago. And according to a 2023 report, the Islamic finance industry is expected to be worth around $6 trillion by 2026, meaning a 50% growth rate in just the next 2 years. Crazy stuff. So then, now that we understand how Islamic finance works, this begs the question of how this all ties into crypto. Well, put simply, the same rules that apply to Islamic finance also apply to cryptocurrencies. The idea of Sharia-compliant cryptos has been around since the very earliest days of Bitcoin, as Muslims who became aware of Bitcoin began to wonder how it fitted in with Islamic principles. In fact, though, it's only recently that Sharia compliance seems to have become a reality. And it certainly hasn't been a smooth journey. Back in January 2018, Bitcoin, and the broader crypto market for that matter, was slammed by Islamic leaders in places like Egypt and Indonesia who pointed towards crypto's high-risk nature. Conversely, in April that same year, a Sharia advisor working for a fintech company declared that Bitcoin is halal under Sharia law. As you can probably imagine, this back and forth of whether crypto is halal or haram continued for quite some time, and the true answer is still up for debate to this day. However, there are some crypto projects that have made conscious decisions to become Sharia compliant in order to onboard Islamic investors. For instance, back in July 2018, the Sharia Review Bureau named Stellar as the first Sharia-certified blockchain to be used for payments and tokenizing assets on-chain. Ethereum followed just over a year later, with Amani Advisors, a Sharia advisory firm, naming ETH as compliant with Islamic religious law. 2 months later, Algorand received the same certification from Bahrain's Sharia Review Bureau. However, as bullish as these developments were, the uncertainty continued. In July 2020, the Malaysian Sharia Advisory Council declared that trading digital assets was permissible. Conversely, in October 2021, a major Islamic organization in Indonesia declared that crypto was in fact haram. In fact, there were multiple occasions between October 2021 and February 2022 when Islamic leaders based in Indonesia declared that cryptocurrencies, including Bitcoin, were non-permissible. While the debate on crypto Sharia compliance then stayed quiet for a while after this, things have now started to shift to a much more bullish consensus. This shift began in September 2022 when an Australian DeFi platform called MRHB Network started seeing high levels of interest in Sharia-approved cryptos. By the way, MRHB is short for Marhaba, which means welcome in Arabic.
Marhaba. Marhaba.
Anyway, This move sparked renewed speculation around the future of Sharia-compliant DeFi protocols. But the most recent development happened at the end of September this year, and this is the one we are most excited about. That's because popular crypto exchange Bybit has created the world's first Sharia-compliant Islamic crypto account on its platform. This move allows Bybit to offer spot trading for 75 Sharia-compliant cryptos, offers a DCA trading bot, and much more, all without compromising Islamic principles. And by the way, if you haven't yet got an account with Bybit, then good news. We have a video that will guide you through everything you need to know, from setting up your Bybit account to utilizing Bybit's many tools to make your first trade. The link to that is in the description. And as if that wasn't already awesome enough, we have even better news for you. What if we told you that you can earn up to $60,000 in rewards and enjoy 0% trading fees just for signing up? Well, you can. Our team has been able to secure this incredible deal exclusively for you, our loyal Coin Bureau viewers. So just head to coinbureau.com/deals or use the link in the description below. Okay, now, as you'll know by this point, understanding whether a crypto is compliant with Sharia law is often a tricky subject. When you take into account everything we've covered so far, you quickly realize why there might be a few hurdles in the way. One of these reasons is something we touched on earlier, and that's the need for transactions to be backed by real, tangible assets. For some cryptos, this isn't a problem. Take Paxos's PaxG token, for instance, which is backed by real gold that's stored in Brink's vaults in London. On the other hand, it's hard to imagine that many meme coins are backed by, well, anything really. Thankfully, though, a crypto doesn't technically have to be backed by anything to be Sharia compliant, so long as there is a legitimate use case for that crypto. Another Sharia compliance issue is something called gharar, which literally means uncertainty and risk. Essentially, if a crypto is driven by speculation, it creates uncertainty and risk that would deem it haram. Of course, this isn't the case for every crypto out there, as some are driven by real utility. For instance, stablecoins would be an obvious choice here because there's no speculative price action. Likewise, cryptos such as Bitcoin and Ethereum aren't driven so much by speculation, but by real use cases, namely as a store of value and as a gas token to power decentralized applications, respectively. Another difficulty with Sharia compliance is that not all cryptos are fully transparent. Again, this creates additional risks and raises concerns around ethical issues. This basically rules out many cryptos that are closed source and therefore can't be inspected for safety measures. There's also the ban on interest, or riba, that we mentioned earlier. This means that futures and derivatives are considered haram, as these are typically paid back with interest. It also means that while staking to support a network is fine, staking rewards aren't allowed if they're derived from inflation rather than from transaction fees. But perhaps the biggest obstacle in the way of Sharia compliance is maisir, or gambling, which is strictly prohibited by Sharia and Islamic law. This ties into gharar, or excessive speculation, but maisir is far more dangerous. In fact, maisir literally translates to game of arrows. Now, to take another cheap shot at meme coins, it's no secret that the majority of these could be considered gambling, particularly the ones with smaller market caps. Heck, buying a microcap meme coin that's just launched is the equivalent of walking into a casino, throwing money into the air, and hoping it happens to land on the right number of a roulette table. Needless to say, these cryptos would be haram. However, what's interesting is that whether a crypto is halal or haram is largely down to interpretation of Sharia guidance. For instance, Dogecoin might sound like a gamble, and therefore you'd be forgiven for thinking it would be instantly prohibited. However, there is a case to be made that Dogecoin has a similar store of value use case to Bitcoin, and there have been plenty of examples where payments have been made using Doge. Yes, there is an element of speculation, but because of its large market cap, this speculation arguably isn't excessive. And besides, speculation itself isn't necessarily haram because all investments involve a degree of speculation. Thankfully, to avoid this confusion, there are some cryptos that have been created from the ground up with Sharia compliance in mind. In fact, there are some blockchains that are specifically built to comply with Islamic law. You'll have to look those up on your own time. In terms of the Sharia-compliant cryptos being offered by Bybit, however, the list currently includes 18. These are USDC, USDT, BTC, ETH, Sol, XRP, ADA, Matic's Pol, Avalanche's AVAX, Link, Litecoin, BNB, Atom, Ethereum Classic, Uniswap's Uni, Stellar's XLM, Algo, and Tezos's XTZ. As noted earlier, this list will eventually include 75 cryptos and will leave a link to the info page about Bybit's Sharia-compliant cryptos in the description. Now, obviously, we're not claiming to be experts in Sharia compliance, nor do we claim to have a professional understanding of Islamic law. The truth is, the Sharia compliance of many cryptos is still up for debate, and some have widely varying options. We'll leave a handy list in the description, though, that seems to do a good job of identifying halal cryptos, but we do encourage you to do some extra due diligence before investing. So then, now that we know more about crypto's Sharia compliance and the bullish momentum coming from Islamic investors, this leads us to the big question: what does all of this mean for crypto more broadly? Well, to put it simply, these latest developments are incredibly bullish, particularly for the altcoins that were mentioned in the previous section. That's simply because there are billions of dollars that could be about to splash into the crypto market, while the number of users could likewise be about to skyrocket. With Bybit as the first mover, it's likely that other exchanges will follow suit, making it easy for all that new money to flow into the crypto market. This might sound a little far-fetched at first, but take a second to consider a few statistics. First and foremost, recall that Islamic finance is a $4 trillion industry, and that's set to increase exponentially over the next few years. If even 5% of this money was to flow into the crypto industry, that would mean $200 billion in crypto investment. What's crazy is that this is a conservative estimate. When you consider that conventional finance has already proven to be non-compliant with Sharia law, and the fact that Islamic finance was created as an alternative financial system, you quickly realize how crypto could help serve that vision. Also take into account that Islam is one of the world's largest religions. As mentioned earlier, it's estimated that over 2 billion people in the world follow the Islamic faith. That's a quarter of the planet's population. Now, obviously, not all of these people will find their way into crypto, but this does give a sense of the potential impact. In the Middle East alone, there are around 500 million people, roughly 6% of the world's population. Around 90% of that population follows the Islamic faith, and research from Chainalysis suggests that the Middle East already accounts for 7.5% of crypto's overall trading volume, even with all the uncertainty around Sharia compliance. Can you imagine just how much this would increase if the crypto space becomes even more Sharia compliant? In fact, not only would this be bullish news for onboarding new Islamic investors, but it would also remove some of the stigma around using cryptocurrencies. When worldwide investors see that crypto can pass the criteria to become permissible under Islamic law, this would raise confidence in crypto as an asset class. This in turn would spark a new wave of interest in crypto, which could see trillions of dollars flow into the market. And make no mistake, this doesn't just present an opportunity for BTC to enjoy a short-term pump. This could be one of the key catalysts to really kickstart the crypto bull market. And we can't wait to welcome more people into the space, inshallah. Okay, and that just about rounds up today's video, folks. But what did you think? Did we miss anything important? Are you as bullish on these developments as we are? Let us know your thoughts in the comments below. Don't forget to check out the Coin Bureau deals page, where you can find that exclusive Bybit deal we mentioned earlier. And not only can you get up to $60,000 in bonuses and 0% in trading fees, you'll also find additional exclusive deals for a wide range of exchanges, as well as discounts on the best hardware wallets crypto has to offer. The link to that wonderful resource is in the description below. Thank you all so much for watching, and we'll see you in the next one. This is Guy saying Maser Salama.